Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, welcome. Good afternoon and welcome guys. Thank you for joining Stocksnipertrading. My name is Ron, my partner is Dave. Thank you guys for joining. It is beautiful 4th of July. Thank you for all of those that are celebrating, guys. I hope you guys are having a fantastic day, long weekend for you guys in US. So what we did today, guys, we came into the markets. We want to do like an educational session for about 90 minutes, maybe 2 hours maximum. What we're going to do is we're not going to trade, guys. So just want to make that clear to everybody. We're going to not look to trade today because US banks are closed. Most of you guys are aware of that. There's low volume in the markets, and also some securities that you're trading will be closing maybe right now, maybe 1 p.m., 2 p.m. It might be early market close depending on your broker. So what we're going to do is we're going to do an educational session, and then we're going to get more into trading tomorrow, Wednesday, Thursday, Friday, and into next week. So thank you guys for joining. I do appreciate everybody. Thank you guys on Zoom. I'm back from my vacation. It was nice. We toured around a little bit of Ontario and Canada, Eastern Ontario and Quebec City. It was nice getting out there. We spent the Canada Day in the nation's capital, Ottawa, which was really, really nice. I haven't been out there since I was really young, since I was maybe, I think my son's age, like 10, 11, was the last time I went out there in Ottawa. So it was really, really nice to go out there and see it and the kids to enjoy it too. So it was nice. It was just the weather was kind of rainy, and we had some thunderstorms and things like that. So you couldn't enjoy it as much, but it was still nice to get out. So thanks guys for joining. Everyone on YouTube, I appreciate you guys as well. So remember guys, hit the like, subscribe, the notification bell so that you guys can be informed when we do go live, and so that you can trade with us, you can learn with us, and you're notified. Okay guys? So first thing what we're going to do is why are we not trading right now? So most of you guys are aware that the US banks are closed. So they are a big reason why the markets are not moving today is because when Wall Street is closed, there's less volume and less liquidity into the market. So as you can see on normal days when Wall Street is open, you have the 9:30 Wall Street open, and throughout the entire day there's a lot of volume moving. So today it's a lighter day. I seen some of you guys had to really work hard to get your daily goal today because there's lack of volume. So if you guys came close to your daily goal today, that's fantastic that you guys did that. But it's also you should know as traders, maybe on days like this, is take the day off, okay? Take the day off. Remember, these markets are open every single day. We're going to have to go through some stat holidays, and the majority of those ones are when US banks are closed. That's maybe when we should take a day off, or maybe we should be doing some back testing. Maybe we should be going over our journals, things like that. You don't want to ruin a good trading week or month on a day where the US banks are not opened, and then you go into drawdown and then you get frustrated. This is a day that you shouldn't be trading unless you're trading like London when there's more volume in the market. But right now this is New York time, so New York banks are closed. Okay, what we're going to talk about today is a daily trading routine which requires patience and discipline. Okay, so before we get started, I just want to go over here to Discord. I posted this for our members right before the weekend. Okay, so I'm just going to go over this. So for you guys that read this, I'm going to do this for others that didn't read this. So mastering discipline takes time and effort, but with consistent practice, it can become a habit. So here are a few tips to help you develop discipline. Okay, so what we're going to go over today is kind of like a checklist of what we should do as a daily routine to get ourselves ready for the markets. And if this is something that you do, maybe check mark something that I talk about, maybe have a pen and paper on the side to jot note some things, some notes, make some notes for yourselves. And if there's something that you're confident in doing and you can do this with no problem, put a check mark. If there's something that you need to work on to add to your daily routine, then maybe circle it, and maybe this is something that we need to add to your routine. But I really believe in when you trade, you should trade like a robot. Okay, most of you guys have heard me say that because trading should be done very automatic. So you're not deviating from your daily routine, so that everything when you're trading the markets, it's the same thing over and over and over and over until it gets really repetitive and you've developed good habits, and you can kind of do this when you're sleeping. So you don't have to really think about anything because it's part of your daily routine. We always talk about these analogies like driving a car. I drove from London all the way to Quebec City. It was a 12-hour drive, but when we got in that car, it was just routine. We get in the car, we drive, take a break, go get some tea, get back in the car, get back on the highway. There's different lanes you can drive in. You can either drive the slow lane, middle lane, fast lane. That's up to you. So trading is the same way. You can either trade in the slow lane. You could be where you're learning, you're going slow, nice pace. You don't need to go into the fast lane if you've never driven in the fast lane or you've never traded in the fast lane. So don't be using lot sizes that are not accustomed for your account. If you only have $1,000 account, don't be trading with large lot sizes that some traders are using with $100,000 account. It makes no sense. That's like you. If you're driving and you're used to driving in a slow lane, then don't go into a fast lane and drive where cars are driving 140 kilometers an hour in there where you're not used to it, because you're going to probably panic. There's going to be people driving behind you, beeping the horn. Is going to cause you to get frustrated and things like that. So trading is the same way. I know I use these silly analogies, but most people know how to drive a car, and you understand that when you're driving, it's a daily routine, but you have your routine. So, and you're comfortable with it, and that's how trading should be. So, number one, let's go through these. One, we need to set clear goals. Okay, so how many of you guys now are setting clear daily goals for yourselves? And what I mean by a clear daily goal is, I'm not talking money-wise, okay? So I don't want to talk about money. I know some of you guys might have a $10 a day goal, or $100 a day, or $1,000 a day goal money-wise. But that's all insignificant, because if I'm using a $100,000 account, my $10, $100, $1,000 is a different percentage than you. So what we want to focus on is setting clear goals, but with either a percentage of your account or your capital that you're trading with, or simply if you're trading forex, a pip goal, whether it's 50 pips per day, for example. How many of you guys are setting this? I'm asking this question, guys. So this is for everyone on YouTube and everyone on Zoom. Are you guys getting better at this? Because I remember when I was trading, where I was struggling as a trader, I had absolutely no daily goals. I didn't know what I was looking to get out of the market. I would just trade and trade and trade until I got tired, until either I made some money or I lost some money, and that was kind of like my trading day. But I didn't have any clear goals, so I had no idea what I was looking to get out of the markets. It's like where you're driving, you have a destination. If you don't have a destination, you're just going to continue driving and you have no idea where you're going. So you have to, guys, set a clear goal. Some of you guys are 0.5%, 1%. Some of you guys are 20 to 50 pips per day. That's really good that you've set yourself a clear goal. This is where it starts, guys. Okay, this is just the beginning. Okay, so set yourself clear trading goals and try and be disciplined to respect those. When you hit them, maybe walk out of the markets. Also, if you hit a daily trading drawdown target, maybe it's time to be disciplined and walk away from the markets instead of over trading or over leveraging or revenge trading and developing again those bad habits that consistently make us lose in the markets. So set clear goals. Start by defining your short-term and long-term goals. Okay, most traders have short-term goals and some traders have long-term goals. Remember, trading everyone is different. Some traders are scalpers and some traders are swing traders or investors. So I'm going to talk about this too, how to identify what type of trader you are, because that does really will change your daily goals, will change the way how you look at the markets if we have different styles of trading. Okay, so these are what we're going to go over to make sure you understand what to look out for in the market. So make sure they are specific, measurable, attainable, relevant, and time bound. So there's this acronym called SMART. So this means specific, measurable, attainable, relevant, and time bound. So that's that acronym SMART to help you remember those. Having a clear vision of what you want to achieve will help you stay focused and motivated. I know that this helps me stay motivated. Every time I can clearly hit my daily goal, it keeps me motivated and keeps me wanting to come back into the markets and hit that daily goal again. So this helps with the discipline again, guys. So number one, okay, this is set clear goals. Number two, break it down. Okay, so this is where we can divide your goals into smaller, manageable tasks or milestones. This will make them less overwhelming and easier to tackle. Create a schedule or to-do list, prioritizing tasks based on the importance and urgency. So this is where we can take a task and break it down into smaller segments, and when it's easier to achieve when we have smaller, as opposed to saying I want to become rich overnight or I want to become a millionaire. You know how most traders talk. When you ask them what would you like to get out of trading, 99% of traders are going to say, I want to make money, I want to make $1 million, and I want to get rich. Okay, but that's a good goal to have, but is it realistic? Not really. So we need to break. You can become a millionaire in trading. You can. Everyone can here. But what we need to do is we need to break that down into smaller, manageable tasks or goals. So maybe we will become millionaires, but how long? It might take some of you guys 1 year, 3 years, 5 years, 10 years, 20 years, or 30 years. Okay, so that's why it's all a broad spectrum. But what can we do to achieve to become a millionaire? Is we got to start off with small daily goals. So breaking them down, and this goes for everything. You know, just everything you do in life. If you go to the gym, right? A lot of you guys go to the gym and work out. You can have a huge, say you wanna go on stage and you want to become a bodybuilder and things like that. That might be your ultimate end goal, but to get there, you need to learn how to train different specific body parts each day. Maybe you want to learn how to train your arms. Maybe one day is your back development, maybe one day is shoulders, maybe another day is your legs. But you can see how you can break down body parts into smaller tasks, which when you finish them, you're proud of yourself because you finished a leg day, and maybe you were in the gym for 1 hour or 90 minutes or whatever it is, but you achieved one specific body part to help you get to where you want to go, as opposed to just training all body parts and not knowing what to look for. So trading is the same way. Start to break things down into smaller segments. Will really help you understand what you need to work on and what's working well, as opposed to just a huge broad spectrum, and then that will leave you very confused and maybe not know where to go. Okay. Number 3, create routines and stick to them. Okay, so that's what today is about. It's about developing routines and being disciplined to follow them. So create routines and stick to them. Establish a daily or weekly routine that supports your goals. For example, if you set a goal to exercise regularly, set a specific time each day for your workout. Over time, sticking to a routine becomes disciplined habit. So again, to go back to the training or going to the gym, most people have a daily routine when they go to the gym. Some of you guys maybe get up early before work and go to the gym, and then you start your day. Other people go to work, and when they come home, they relax, they have supper, and then they go to the gym. But it's a daily routine where they stick to those hours every single day, so it becomes a habit, as opposed to one day you're in the morning, next day you're in the afternoon, next day you're in the evening, next day you're back to the morning. It just maybe when you have routine, it's easier to follow and stick to it. So trading is the same way. Identify potential distractions. Recognize and eliminate or minimize distractions that might hinder your progress. This could involve reducing time spent on social media, limiting unnecessary commitments, or creating a dedicated workspace. Eliminating distractions. So most of us, we get distracted with social media, okay, TikToks, and going on Netflix and things like that. It's nice when you want to spend time on there, but don't consume your entire day on social media when you could be learning something that could possibly change your life. So dedicate some time into journaling, dedicate some time into going over the charts again, as opposed to just staying on social media and limiting distractions. So everybody wants to be a good trader, but a lot of traders don't want to put the time into becoming a good trader. So it's guys, what I had to do when I was learning, I was young when I was learning too. So I wanted to go out. All my friends were going out to the clubs. They were going out, and I used to spend weekends going over charts because I knew what I wanted to get out of these markets. I knew that I wanted to become a trader and be disciplined and do this the rest of my life. So I had to sacrifice time with my friends, with my family, to do this. I had to sacrifice time on social media. I had to not watch as much Netflix. Like I want to watch Netflix, but there's some days where I'm not thinking about Netflix. I'm going into the charts and my journal and things like that. So I know it might sound easy, but it's not. A lot of traders cannot eliminate these things. It's very hard. So you got to start small. It's just like when you want to quit smoking. You cannot just quit smoking by just stop cold turkey. You might have to, if you smoke like a pack a day, you might have to maybe smoke maybe half a pack a day. You got to limit yourself slowly. Unless you guys are very disciplined to quit cold turkey and just quit smoking. But most people cannot do that. They need to start slowly from a pack to half a pack to maybe 5 cigarettes a day to maybe 1 cigarette a day, and then hopefully maybe they can quit smoking. So the same thing is with social media and distractions. You got to eliminate them slowly. Unless you guys are disciplined enough to stop cold turkey but that's not the healthy way of doing it. You want to start off slowly and remember, it's a progression, it's goals you want, and it helps you stay confident in doing this. So if you were a smoker and you were smoking 1 pack a day and now you've limited to half a pack a day, that's good. That's a great start. Okay, but this will keep you in the habit of now maybe from that half pack day to go down to 5 cigarettes a day. Like if you go to all of these places to help you quit bad habits, this is the way how they're going to teach you. It's very hard to go cold turkey unless you're a very, very disciplined person, and most people cannot do that. Okay, so stay accountable. This is number 5. Find ways to hold yourself accountable for your actions. You might consider working with an accountability partner or joining a support group. Share your progress, challenges, and achievements, and seek guidance and feedback when needed. So this could be anything. Whatever you need help with, seek a group that will help you and motivate you. Here at SST, we're creating a positive community of traders at all levels, whether you're a beginner, you're intermediate, you're advanced. We want to make this a welcoming environment for everybody, and it doesn't matter what level of a trader you are. We welcome everybody, and we encourage you to share your charts in here. You'll get feedback from admins, myself, Dave, other members in the group. So we'll help you become a better trader. So stay accountable and continue maybe joining support groups or other trading groups that are positive and can help you by answering your questions as you're learning. Okay, and practice self-control. Develop willpower and self-control by gradually challenging yourself to resist temptations or break bad habits. Start with small steps and gradually increase the difficulty. It's also important to reward yourself for sticking to disciplined behavior. So when we give ourselves big goals, it's hard to achieve those. Okay, give yourself smaller goals, stay accountable, and when you achieve those milestones or achievements, be proud of yourself and reward yourself. So what we recommend in trading is that you do, hopefully you guys can get there. Okay, it's a work in progress, but maybe when you guys do get there, we recommend that you get rewarded by the markets by taking weekly payouts or monthly payouts as if it's a job. A lot of traders want to keep the money in there and keep it compounding, keep accumulating, but it's unrealized. So when you realize it, maybe it's going to change the way you look at the markets. Maybe you've had a great week and today you want to take out $100 and you want to go buy your groceries, something like small like that. But that will really help your psychology to understand that you're doing something really well and it's rewarding you. So something simple as just buying your groceries, it might not seem significant to other people, but for a trader, you've gone into the markets, you've gone through the discipline of learning your setups, you've made some pips or percentage, and now you can go and really pay your groceries or pay your rent or pay just pay off your mortgage or pay off your student line of credit with trading. So that will help you develop the confidence and understand that the markets are real and you can get real money out of these markets as opposed to just having everything unrealized, and then you might make a mistake and you might lose it all again, and then you're going to have to go through those stages again. So rewarding yourself for doing something good in the markets. Build momentum. Okay, so just like the markets build momentum and you can become a momentum trader and you can trade with the momentum, whether it's bullish or bearish, building your own momentum is key. So consistency is key to improving discipline. Start with small achievable tasks and gradually increase the complexity or difficulty. As you accomplish these tasks, you'll build momentum and confidence, making it easier to maintain discipline over time. Okay, so remember that mastering discipline is a process and there may be setbacks along the way. Be patient with yourself, learn from your struggles, and persevere. Okay, so with that being said, I want to go back now to our charts over here. So daily trading routine, patience, and discipline. So hopefully some of you guys, maybe 1, 2, 3, 4, 5, 6, I don't know which one, maybe one of those resonated with you. Maybe one of those is you need more to work on it. But learning patience and discipline in these markets will help you become a successful trader. Most traders that are unsuccessful, they have absolutely no daily trading routine. They lack patience and they lack discipline, and also many other things. So like risk management and all of those things. We can hold those on a different call. But Pat, sometimes you get greedy. Yeah, so fear and greed, that could also hinder your being successful in the markets by being scared or greedy. So that's why trading with a daily plan or target will help eliminate those things. Okay, so we'll talk more about that. Okay, guys, so over here, okay, I see Jake, you're asking, what is this platform over here? Jake, this platform is called Bookmap. Okay, so what this is a live trading platform with the liquidity of the futures market. So right now we're looking at the Dow Jones, and these are this is our heat map over here, and these are the actual transactions occurring in the market. So you can see today, for most of you guys that are familiar with Bookmap, we have our offers up here and we have our bids. We're right at the VWAP all day, basically 11:30, 11:45, 12 p.m., 12:15, 12:30, and you can see the CVD. Okay, it's right around the baseline, right at this like zero. So it's a very consolidated day today, but we use this with our live trading. This is if you want to get a more advanced platform and you want to look at live transactions in the market, because when we're looking at candlesticks, all we see is like volume. We have no idea what's going on inside this candlestick. We can only see the open, high, low, close. But when we have a platform like this, it can maybe help us identify are the bidders accumulating, are the offers accumulating, how will this market move, and gives us some extra confluences, okay? But that is Bookmap over here. We have a free link, guys. If you want, you can download it, and what I recommend and suggest is that you use it and practice with Bitcoin. Bitcoin trades 24 hours a day. And you can, same setup, you can look at the heat map of Bitcoin, you can see the offers and the bids of Bitcoin, you can see the transactions, you can see the volume profile, and you can help learn. And once you feel confident by doing this, then maybe you want to subscribe and get other securities that you trade, okay? So I'm going to start off, guys. Okay, so how many of you guys are following? Have you guys gotten better at your patience and discipline in the market? Some of you guys have been with SST for this weekend. You guys just signed up. Some of you guys have been here for 6 months. Some of you guys have been here for a year. And some of you guys are the day ones that you guys started with us a couple years back. So everybody learns at different paces. Everyone has different styles of learning. Okay, it's just like going back to school. Remember when you were in school, some of your friends could pick up things faster than you could. Okay, I'm living proof of this. I was in university. I'm a person that needs to sleep in the library and read and read and read and really learn things for myself. And then I had my friends that were just naturally gifted and they didn't need to read as much as me. They could maybe go for a day, couple hours, and then go write the exam, and they would get 80, 90%. And then myself, I had to sleep in the library for 2 weeks preparing for that exam and barely manage an 85, So I didn't look at myself as why is it harder for me to learn than them. I just looked at them as they were just maybe had more experience. Maybe their parents taught them mathematics at a younger age or something like that, and maybe they just naturally are gifted and smarter. So I didn't use that as to hinder me. I just looked at them as motivation, but I stayed in my own lane, and I knew how I learned as a person. So I got through university with good grades, but I had to work harder than the others. So that was just on me. I just learned how I was at learning concepts and learning things. So everybody, again, we're all different. Okay, so trading is the same way. We're learning new concepts. We're learning new topics. There might be somebody today that just looks at the chart today and maybe can get 0.5% per day in the next couple weeks. And you and I have been in these markets for years and years, and we just see that and we're like, what is going on? But do not compare yourself to others, okay? Remember, this is learning. So some people learn faster than others. Don't use that to discourage you. Use it as motivation. But just know how you learn. Okay, so starting with a daily routine. Now, a trading day starts when you get up, right? But we can work towards that, like weekends. Okay, so I want to go to weekends. How many of you guys do anything trading wise on the weekends, or do you guys just take the weekends off to not even think about the markets? Okay, so this is where we're going to get started today. We're going to start off, how do we prepare ourselves on weekends? Okay, so there's going to be traders in our group that say, Ron, I prepare a couple hours on the weekend, or Ron, I don't even look at the markets. I don't care about the markets on the weekends because that's my time to relax. And they're both okay. but they're both good. Sometimes I want to just get on when it's a weekend. I want to enjoy my weekend. I don't even want to look at a chart either or study. That's how I used to be. But then I used to say I don't need to spend my entire weekend at studying unless I'm really, really into learning. 1 hour, okay? 30 minutes is all it takes. What we're doing is we're doing a preparation to get ourselves ready for the trading week. I'm not talking about, guys, if you're learning on webinars or charting, that's different, okay? I'm talking about preparing for ourselves for the trading week. So on a weekend, what I do is Sunday morning is my day. I get up early before the kids are up, and I prepare 30 minutes or 1 hour. This is where it's going to come down to, again, being specific with what you trade, quality over quantity. So I'm just speaking for myself. When I trade, guys, I don't trade 5 or 10 securities. I trade 1, possibly 2 securities throughout the week. My security that I trade is US 30, Dow Jones. And I tend to trade, if I'm going to trade anything else like gold or oil, I'm going to prepare myself for it. So what I do is 30 minutes or 1 hour maximum. I go over the charts. I look at the weekly analysis. Maybe I start off with a top-down monthly, weekly, and I go to the daily. I start to see how last week was trading, the week before, and what we're going to go into this week. Also, with the preparation comes with news. Okay, so there's a lot of news websites for free that you can use, and some of the good ones, okay, not Forex Factory is just a basic one. It's not the best one, let's be honest here. This is Forex Factory. So this is part of my weekend preparation as well. It's part of also my daily preparation, but more so on my weekly. So if I'm trading Dow Jones this week, now pretend it's Sunday over here. Okay, so I'm looking over, I'm preparing myself. What is high impact news to come? This is part of my trading routine. So over here, Forex Factory has these folders. You have yellow folders for low impact, you have orange folders for medium impact, and then you have red folders for high impact. These just mean the volatility. So the red folders will come with more volatility in the markets. So if it's a specific security that you're trading, you should know when and where this will happen. So right now, like Monday, 2:30 a.m. pre-London right here. If I was trading anything to do with the Swiss franc, this is CHF, this is the Swiss franc, I would want to be aware that at 2:30, Swiss franc is going to release their CPI month over month, and it's a red folder. And this will have high impact if I'm trading this specific security, this specific currency. So I want to know that. Make note of this, that on Monday at pre-London, there's a red folder. So that if I'm trading this, I am aware of this because there's going to be volatility. So you don't want to incur big losses. Okay, so maybe you want to avoid trading this time and watch after how the market moves. So what I'm doing is I'm kind of preparing myself for what's to come. So I trade US 30 on like today, Tuesday. So Tuesday, if I'm going through my Sunday analysis, I see, okay, all day USD has bank holidays. The banks are closed today. So maybe I don't want to be trading US 30 because Wall Street is closed. So I'm preparing myself. Let's look for tomorrow. Okay, so go into Wednesday. Wednesday, we do have news. We have OPEC meetings all day. So if I was trading crude oil, maybe I want to be aware that all day we have OPEC meetings. And if you really want to get more specific with this, you can pull up another website, commodities website, and you can learn what these OPEC meetings are all about and how will it affect crude oil and who is talking and things like that. Also here, 2 p.m. tomorrow. This is really important. We have a USD red folder, FOMC meeting minutes. So a lot of you guys are aware now of FOMC. This is where Jay Powell speaks about interest rates and inflation, and this can cause volatility in the market. This also is just the meeting minutes. So this was from our prior FOMC. So this is where the meeting minutes are released, and there's going to be some volatility. This is not the FOMC where we have interest rate hikes or decreases and the conference call after. That will be next month. But right now, there's going to be volatility Wednesday at 2 p.m. So I would be jotting this down. If I'm trading mid-afternoon on Wednesday, I want to be aware of this. So I'm preparing myself for the week. And then we go into Thursday, and then finally Friday. Friday, guys, how many of you guys are aware the first Friday of every single month is NFP? So this will give us high impact news, our average hourly earnings month over month, non-farm employment change, and unemployment rate. So these are our unemployment numbers. If you're trading gold, okay, I know a lot of you guys like to trade gold. Make sure you guys are aware that 8:30 a.m. they're going to release the unemployment numbers. This will be very bullish or bearish and cause a lot of volatility if you're trading gold or any other security that is correlated with the US dollar, because the US dollar is also going to be impacted by these unemployment numbers. So this is just preparing yourself for news. Okay, so this is Forex Factory. It's a free website. It's not the greatest, but it just gives you some specific things to look at. There's also FX Street. There's also investors.com. There's Bloomberg. There's Bloomberg that you can subscribe. You can pay a little bit more if you want to, but you don't need to pay unless you're going to really study fundamentals. So what I recommend is do a little bit on the weekends if you can. Okay, 30 minutes to 1 hour. Some of you guys do Sunday nights, some of you guys Sunday mornings. If you can dedicate a little time to help prepare yourself. And remember, quality over quantity. So if you're not trading 10 or 20 securities, if you're only trading 1 to 3 securities, it shouldn't take you that long to prepare yourself for the upcoming week. Okay, that's for weekend. If you want to do that, if you want to put into your daily weekend routine, you can. If not, no worries. You don't need to. Okay, relax on the weekends. Spend the time on the weekends with your family and friends, and then when you get ready to trade. So, for example, now this is going to be part of our routine. I live in North America. Okay, so my session of choice is Wall Street and like trading right now, mid-afternoon. I like this time, 1, 2, 3, 4 p.m. before the markets closes. I also, is London my ideal session to trade? Not really, because I don't really enjoy getting up at 2 in the morning, 3 in the morning, 4 in the morning. It's just for you guys in Europe, maybe it's best for you. That's your morning. But when I'm trading, is London part of my daily routine? Only if I'm getting up to do my top-down analysis and charting. London is not one of my heavy trading sessions. I put more focus onto Wall Street and post-Wall Street. So this is for you guys. Part of your routine is what session is best for you to trade with your personal lifestyle and where you live. So remember our different sessions that we have. We have the Asian market, which is roughly 8 p.m. Eastern, goes till about 1 a.m. It's more of a slow, consolidated session, but it's good for learning. Okay, I learned a lot in the Asian market when I was younger because I was done school. I would come home and then I would eat, go to the gym and come back, and then I would get ready for the Asian market, learning how things moved. I learned fast that it wasn't the greatest for trading. It didn't have the highest volume, but it was still, I was learning price action. So there's the Asian market, okay? And then we also have pre-London and London, okay? That's 1 a.m., 2 a.m., 3 a.m., 4 a.m. This is if you live in Europe, maybe this is your session or your part of the world. For me in North America, it's not the greatest getting up that early, but I used to sacrifice a lot getting up. Before we even had SST, I was getting up 2, 3, 4 in the morning. I was doing a little bit of trading. I was doing my charting. I used to like the moves in London. I don't like the moves currently in London. Years ago, London used to be really good. Market open, there was some big moves, but now I'm noticing it's getting really choppy. It's getting very consolidated during London. So I would get up and do my top-down analysis, and we'll talk about that part of routine. And then Also, my favorite sessions are like 8:30, 9:30, 10 a.m. Wall Street market open, and then also post like 1, 2, 3, 4 p.m. going into power hour. Okay, so what you need to do is we need to figure out what is your daily session that you enjoy trading, that you're focused, you're not rushing. For some of you guys that work, it might be, let's say you guys in North America, you work your 8 to 4, your 9 to 5. Okay, so you need to decide. You cannot trade New York because you're at work all day. So you need to now figure out, do you want to trade the Asian session, or do you want to get up a little early and sacrifice some sleep and get up and trade the London market before you go to work? So these are all things that you need to have to go into your daily routine, because 9 to 5 is your work routine. You cannot do anything about that. So if you want to fit trading into your busy schedule, you need to figure out, am I going to do Asian or am I going to do the London market? So that is part of your daily routine that we need to figure out. Some of you guys might work shift work. Okay, some of you guys are working nights and days and flip-flopping and things like that. So your trading routine will change with your work schedule. So that's why you got to become very disciplined. If you're working straight days for a couple weeks, then maybe you need to focus on the Asian and London market. Then when maybe you flip, maybe like you're a nurse, you might have different times where now you might be working afternoons or nights, and then now you might be able to trade the New York session or something like that. But this is part of your routine, your daily routine, not mine, it's yours. So I had a daily routine too. I had to figure out, and so do you guys understand that? That everybody has their own daily routines. You just need to figure out what is best for you and where you live, on what part of the world, and things like that. Because trading is a job, okay? Most of you guys want to do this just like anybody else. But trading is a job just like any other job that you have. You got to get up. You got to put in a couple hours every single day. You might have other obligations, not just work. You might have kids, okay? It's not easy to trade around kids as well. I have 2 young kids myself, and I've learned over time when they were 6 months old, when they were 2 years old, 5 years old, and now my son is 12. But I've learned over time how to trade with them in my life now. I'm not single anymore. Now I have kids. So I also have to spend time with them. But I also have to adjust my trading schedule with them. So I know I'm talking a lot here, but this hopefully resonates to everybody, that everyone is in a different situation. Some of you guys might be young and single and not married here and no kids. So this doesn't affect you. But later on, it might affect you. If you do decide to have kids and get married, your trading schedule is going to be impacted by this. So you need to learn a routine right now, what works for you, because this routine might be adjusted in the future. But we have to develop something right now that's concrete and we can follow it daily. Like I have my daily routine that I follow very strictly. But I also have to dedicate time also to young kids and my wife and things like that. So that's why sometimes I like getting up in London, okay, for simple things like that. Then my kids are sleeping at that time, so I can get up in London and hopefully sacrifice that time where I want to be sleeping. But that's just part of what it takes to become a trader, is sacrificing a lot of time. A lot of time is dedication. It's the discipline. Everyone asks me, Ron, why don't you sleep? Why don't you sleep? I would love to sleep like anybody else, but sometimes you don't have the luxury of sleeping 8 to 10 hours a day. I would love to, but trading myself, dedicating time to my family, dedicating time to the SST, developing content and things like that, it does, you got to prioritize. You have to. Otherwise, it's going to just get overwhelming and it's going to become difficult for everybody. So start off with a daily routine, guys. You can start off on the weekends. By preparing yourself for news, fundamental news. Also, journaling, okay? I know a lot of you guys still to this day do not journal. There is free journals available, free. Guys, remember, we love free stuff, okay? There's free journaling platforms, there's free apps. I used to always, and I still do, scribble on paper. So I write everything on paper. I don't know why I do that, but it's just the way how I learn. Some of you guys are into technology and you guys are far more advanced than me. You guys have your Excel spreadsheets. You guys have everything down where it's just plotting in a few things every single day and you can learn about yourself. David, does journaling just mean going over your trades? It means going over everything, okay? Look at your strengths and your weaknesses, and your journal will show you. If you're struggling at a specific security, your journal will show you most of your red losses, where they are. So if I'm trading 3 different securities and I see a lot of my trades, the history last week, 2 weeks, last month, I can see maybe I'm doing really well on gold. Maybe I'm trading gold and I'm doing really well. Maybe GBP USD, I'm incurring a lot of losses. So then my journal right there is telling me what I need to focus on. Maybe if I want to continue to trade GBP USD, I got to go back and figure out, why am I taking losses? What am I doing wrong? Or capitalize on what you're doing well on gold. So if you're trading gold and you're becoming very consistent at it, go back and start to look at the time and date, the trades that you're taking. Why are you being successful trading gold and why are you not being successful trading another security? So this is part of learning. And then maybe you want to cut a security that you're not doing well on. Maybe it's a different time. Maybe you're trading in a London market, you're trading GBP USD in London, and you're trading gold in New York. So something just like that. Maybe it's just the time when you're trading. But if you didn't have a journal, it's very hard to understand. Like, if you're just trading throughout the day, like myself, if I'm trading throughout the day, London, Wall Street, Post, Asian session, it's very difficult for me to see what time and date I'm doing well at. If I can have everything journaled, I can look at a specific security, time and date, session, see exactly, and help you get better and better and better and improve yourself. You can capitalize on things you're doing good, and you can work on things that you need, that you're struggling with. So, and that eliminates time, guys, okay? Because remember, we don't have enough time in a day to do everything that we want to do. So a journal helps eliminate time by being very specific and showing you exactly what you need to work on. Rafi, you have a journal and it also helps over trading. Yes. So if it helps with over trading and things like that, that's part of the discipline, to stay in the markets. Okay. So number 1, guys, we get up now. Okay. So let's say we're going to start trading. Let's say we're going to get up 8 a.m. Okay, 8 a.m. We're going to get up. What do we do when we get up? Normally, you have a daily routine when you get up. You wash your face, you brush your teeth, you make a coffee. Okay, that's part of your daily trading routine. Now you come to your trade station. Most of you guys have your own trade stations. Hopefully, it's a nice area where it's quiet, where you can focus. So it's like your own little personal office or your own little personal cubicle is where you trade. So you want to make your trade station comfortable. Okay, so you don't need to have 20 monitors. Okay, a lot of traders think that the more monitors you have, the more successful you're going to be. That's not true. All you need is basically 1 monitor. Okay, if you have 2, that's a bonus, but you don't need to have 20 monitors, okay? Unless you're focusing on multi-charts, multi-time frames. But again, you gotta know what you're doing to have multi-screens, okay? It takes time to learn that stuff. Some of you guys are really good at that multitasking. Others have difficulty multitasking. So I wouldn't start off just because you're a beginner to just go out and buy monitors and think that you're going to become an amazing trader because you have more monitors than somebody else. That doesn't mean anything, okay? So remember, I don't need monitors when I trade. I trade on my mobile. I've been trading on my mobile all my life. So all I need is my phone to trade. But if I have more monitors, maybe I can look at other things. I can focus on news. I can look at also advanced platform like Bookmap. Things like this I cannot do on my mobile, okay? So your trade station now, make it comfortable. So when you come in there, you're ready to work. You're ready to you're coming to work now, okay? So some of you guys are trading at home. That's the luxury of being a trader, is you can trade at home and you can trade in your pajamas every single day. You know, you don't have to get up and put your suit and tie on, or your dress and your high heels. You just come trade in be comfortable. I'm very comfortable trading in my jogging pants every single day. You know, that's my comfort. I don't want to wear a suit every single day. I used to wear that when I worked in the banks and things like that. I didn't feel comfortable. So what is your comfort? So be comfortable, and then we go through our daily trading routine and patience and discipline. So number one, when we always start trading, what do? We always go to Forex Factory. Okay, so I'm just going to go on this again. So today's date, if we're going to trade, let's say we're preparing ourselves for tomorrow. Let's go over tomorrow real quick. If I'm going to trade the European market, I can see that the euro has a lot of news. French industrial production, Spanish services, Italian, French, German. There's a lot of things going on that will affect if I'm trading the euro, the pound, if I'm trading DAX, anything to do in Europe. As we get into, if I'm trading crude oil, again, tomorrow, all day OPEC meetings, that will impact the move of the volume in crude oil. So make sure you know about this. If we're going into Wall Street, normally Wall Street has some red folder news. Tomorrow there isn't. Okay, so and then if I'm trading like this time, mid-afternoon, I have to be focused on FOMC meeting minutes. This is where some traders get confused. This is not where Powell speaks, like his conference with where they have the interest rate hike or decrease. This is just the Fed meeting minutes from prior last month that will be released and will cause a little bit of volatility also in the market, but be aware of that. So that's where my trading day starts. It starts off by looking at news, okay? I'm not a fundamentalist trader like some other traders where they just focus on fundamentals and that's what they do all their life. I like to take a little bit of everything and blend it all in. So I am a fundamental trader, but I don't want to dedicate my entire life on fundamentals. Okay, so just a quick little what is happening in the markets. Also, if you're trading any of the bigger blue chip stocks, is there any earnings before pre-market, after market hours? Like if you're trading Netflix, for example. Why did Netflix go up so much? Because they enforced their new rules on their subscriptions and things like that. That's why they pumped up a little bit. So you want to know when, if you're trading specific securities such as Netflix, when do they have earnings? Okay, because that will impact everything. And also, if you're trading Netflix, what security is it? What is it a part of? So if you follow Netflix or Google or Microsoft or Tesla, they're part of NASDAQ. They're more tech related. So you got to follow those as well. Because if you're trading NASDAQ, it may impact the move of NASDAQ. So part of your daily routine is, what security are you going to trade? Okay, now we have news. So most of you guys are Forex traders. You guys trade the pound dollar. You guys trade the euro dollar. You guys trade the pound yen. So make sure you guys understand the news that will impact those specific currencies that you're trading. Some of you guys are indice traders like myself. I like to trade the Dow and NASDAQ and things like that. So I'm more focused on specific securities or sectors, how they move the markets. Some of you guys are commodity traders. Some of you guys like to trade gold, crude oil, Bitcoin, things like that. So make sure you understand what's going on in the market right now. Like Bitcoin right now is in the news. We're talking right now with BlackRock applying for a spot ETF. They've tried 10 times in the past and all have been denied. But BlackRock is a different. They have over 14 trillion assets under management. So they have more than most nations on this planet. So they're applying for their spot ETF. Their first one was a little bit inadequate. What does inadequate mean? It just means that maybe they're missing something, but they're going to go through the process again and get it. If you guys follow these things, BlackRock has applied for 576 ETFs, and they've been approved for 575 of them. They've only been declined one time in their lifetime. Okay, so it's pretty much, if I was a betting man, that maybe they're going to get the spot ETF. If that happens, then institutions, pension funds can start investing in spot Bitcoin, which would possibly drive the price up because demand will increase. And 2024, they're going to have their 4-year cycle where they go through halving, where they reduce the supply. So we could see developments in crypto in the next years to come. So that's part of, like, I'm also an investor of Bitcoin, but that's part of my long-term a trading routine. So I look at long-term things that can affect the move of these things. So that's just with Bitcoin. Okay, so if you're following Bitcoin, make sure you know about these things. Don't just trade Bitcoin just because your neighbor is trading it or your neighbor is talking about it. Make sure you learn a little bit about it. Learn the background of the history of Bitcoin and crypto, how it started, and where it is right now, and where it could go, and what type of technology does it give that other technologies don't have. So that's part of your routine. It's part of learning. That's why being a trader, investor, it's a lifelong learning process of education. Okay, I've been in the markets for 20 plus years. Does that mean that I know everything? No, I'm still a baby. I'm still learning as much as I can. Every single day there's something new. You got to continue to learn, and because technology is increasing, if you don't continue to learn, you're going to get left behind. So you got to continue to learn as much as you can. Okay, and things that you've learned and you understand, put a check mark there. Then those are things that now move on to something else that you're struggling with or want to learn. Okay, if you know something, you don't need to spend time to perfect it. If you know it, it's good. It's part of your daily routine. It's all good. Continue moving forward. So when we start our trading day, what securities are we going to trade? Normally, what I do with SST is we start off with, we look at how Dow and DAX are moving. Okay, we look at indices. Like if we're going to trade London, we focus on those. If we move more into Wall Street, we're going to look at Dow and Nasdaq instead of DAX, because DAX is more of a European market security. If I'm looking at currency, I'm going to focus on the most liquid pairs that move with volume. So the most liquid pairs are GBP USD, Euro USD. Those are two of the most heavily traded currency pairs. I know some of you guys trade the other ones like AUD, NZD, and things like that. They're just another security pair, but learn how they move too. They're going to move at different times of the day, because now you're trading a New Zealand dollar and the Australian dollar. They're going to move differently than they move in London, New York. They move more towards the end of the day when the Sydney, Australia markets are opening up. So make sure you know about this. Also gold, okay? We get this a lot with gold. Anytime we're trading gold, like right now, everyone wants to trade gold, but they fails to understand the COMEX market. So make sure if you're trading gold or oil, you understand their exchanges. COMEX is the commodities exchange, okay? And it has a specific time when it opens and closes. It opens at 8:20 a.m. Eastern and closes at 1:30 p.m. Eastern, like right now in 30 minutes. So that's why when we're trading mid-afternoon, we're not really focusing on gold as much, because their exchange is closing. So there's going to be less volume. Spreads are not going to be the best. So you got to know your time of your security you're trading. So that's coming with your daily trading routine. So this is where I'm going to ask you, what do you trade? Okay, so this is where you need to answer this question. So if you're trading indices, maybe you want to focus on Wall Street and post-Wall Street session. If you're trading commodities, oil or gold, maybe you want to focus at the COMEX market open, when they release news at 8:30 a.m. Eastern, and then how it trades throughout Wall Street. You don't want to trade it as much like right now, because the commodities exchange is closing. Also, if you're a currency trader, if you're trading the pound and euro, it's best to trade it in the European market, London, as opposed to trading it in the Asian session. If you're trading the Asian session, maybe you want to be focused more on the yen pairs, or like something to do with the Japanese yen, because that's their market. So you want to trade specific to the session that you're trading with the security, okay? And that's part of your routine to understand this. Once now you've done your news, now it's time to start trading. What is the first thing that we do at SST when we start trading is the top-down analysis. How many of you guys are getting more comfortable with the top-down analysis? This should be becoming part of your daily routine. You don't need to spend a lot of time doing this. Some of you guys might take 5 minutes once you get really good at exactly what your eyes are trained to look at. Sometimes when I'm doing my top down for you guys. I spend a little bit more time because I'm explaining more things, but sometimes when I tell you I can do a top down in 3 to 5 minutes, I show you that we're just going through the motions. So when we do a daily routine, what do we look at? Top down analysis. Maybe we're going to start off with the daily. So right now I'm on the 5 minutes. So I want to do a top down focusing on the daily time frames. So now I see how US 30 has been trading for a couple weeks now. I see more of a, last week was like a downtrend. Sorry, 2 weeks ago, last week was more of a uptrend where they came back up. Now we're encountering some resistance up here. We're kind of consolidating. We got some doji candles. Maybe we're gonna create our neckline. We may push for a new higher high, or we may come back down and retest these levels. So we have to start off with a daily top down. So I look at the daily candles, I look at daily highs and lows and other critical daily levels. Then once I've established all those, I move into the 1 hour. Some traders go into the 4 hour, okay? And remember, nobody is right or wrong. We're all correct. It just what analysis you want to add on to your chart. So if you want to do 4 hour, you can absolutely do 4 hour. I just personally like to jump right in from daily to the 1 hour, because then I can start to see how the hourly candles are trading. I can look at specific times in the market right here. Monday at 9 a.m. there was a lot of volatility. There was a big move, and then how it was trading in the Asian session. Here's London. There was a move coming down. We came back up, and this is how we're trading. So I can kind of see specific times of the day when and where it was more volatile on the hourly. And then I do the same thing. I look for hourly resistance. I look for hourly support in the market, supply areas, demand areas. And then I go into trading my 5-minute candles. And now price action. So when we're trading price action, guys, there's different types of candlestick bodies. Okay, we have a bullish and bearish family. Okay, so make sure part of your trading routine is you understand your candlesticks. Okay, you got to know these things inside and out. So when you see these things develop, you know exactly what's happening. Okay, and some of us also scalp on 1 minute. So if you're a 1 minute scalper, you're gonna watch bodies and candles open and close every 60 seconds. So you need to make fast judgments and trade calls quickly, and maybe if a trade doesn't go your way, maybe you got to cut it quickly, and so you're not holding onto trades forever. So price action. Okay, so how are you guys doing at price action? Are you guys getting better at learning your candlesticks? Some of you guys are getting really, really good at this. Others are still learning. Okay, make sure you understand that there's a bullish and bearish family. Learn one family first, because if you learn one, you can learn the opposite. It's that easy. So I would start off learning what the bullish family is. Start off with the strongest candle. What is the strongest and what is the least bullish candle, and what are the ones that are like indecision. So we always start off with, most of you guys know what a bullish engulfing candle is. Okay, so the opposite is a bearish engulfing. So once you learn one, you can learn the opposite. Our second most bullish candle is the hammer. And what is the opposite from the hammer? It's the shooting star. So once you learn one, you can learn the other one. And also context, where they form. Okay, it's not just also identifying what a hammer candle is. A hammer candle can be formed in an area of consolidation, and it doesn't really mean anything. Like this bullish pin bar candle down here. This is of more significance because where it possibly came down red, it came down into a bigger demand area on a higher time frame, and it closed near the high, and that's what started this move right here, as opposed to just finding a hammer candle in consolidation, because it might not move any higher. It's just consolidating. Same with, you might find a bullish engulfing candlestick in an area of consolidation, but it doesn't hold as much significance as maybe a bullish engulfing candlestick that was formed at a hourly or daily demand area. So there's just context. Okay, so it all starts with learning your candlesticks. Okay, make sure you guys are getting better and better at this. Okay, if you want to be a price action trader. So after you've learned and you feel confident that you understand the candlesticks, next thing to identify is support and resistance areas. So what is a support area? A support area could be right here. this white line. You see, every time we're coming down here, it's holding. Coming down, we're holding. Coming down, we're holding. So that is creating support in the market. Support later time, after a while, if we have support here, support here, support here, after, if we bring this zone across, maybe this area is going to develop into like a demand zone where we'll see more bids coming at a higher time frame, ready to come back into this area. So it all starts with price action. Learn your individual candlesticks. Once you've learned that, now you can start to apply what is support, resistance, supply, and demand. So right now I can see in the market we're having a little bit of resistance, like here in the market. Here it got rejected, here it got rejected, here was a little bit of a breakout. So this might be into an area of resistance, which could be an area of supply in the future. So I can bring this box across this zone and start to maybe identify where I have some demand in the market, where I might have some supply in the market. And this is where the market could consolidate. Now it could come down here, come back up, and just trade sideways. We may have a break to the upside, or we may have a break to the downside. And then when we have that, we should also know what are fake outs and things like that. So we'll have times in the markets where there's always going to be impulse moves. Like down here, we might get an impulse move. It comes down red, but when it comes down here, it's coming down into a level of demand where there's some bids in the market, and it might take the candle back up and closes above here, and then all of a sudden does a move like this. So if you're taking that sell on an impulse, you have to be aware that it may get rejected and come back up here before it closes. So it's all part of our job to learn patience and discipline. If we don't feel confident taking that move, wait for the body to close on your particular time frame. So this could be a 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily. It doesn't matter. Make sure you understand that all candlesticks have the same characteristics. So if you're waiting for a body to close, if you're a 15-minute trader, unfortunately you got to wait for 15 minutes to close. 5-minute traders, we wait for 5 minutes. 1-minute traders, we wait for 1 minute. If you go in early before a candle closes, this is your accountability. Remember, part of our routine, it's your accountability. If you know you're going in before a candle closes, then be aware of the consequences. You know that it could get rejected and come after your stop loss unless you're willing to hold for a further drawdown. That's why cutting trades early can help you stay disciplined. Also, what we do at SST is when we're not sure or we're speculating, use a smaller lot size. Use a lot size that allows you to speculate and see what's going on in here if you need to get emotionally involved in your trade. Maybe a 10-cent trade. If it goes against you 10, 15 pips, you're down $1. You're down $1.50. We can hopefully we can recover from being down $1 or $2 as opposed to being down if you did this with a standard size and now you're down $100 or $150. It's harder to come back from that. So anytime you're speculating, what we recommend is trade smaller until you start to see the development and the structure of the move, and then maybe you can continue to trade. If we got that closure below there, then what we're looking for is we're looking for the retest at this area so that the offers are coming down and make this maybe an area of resistance or supply, and then we can push down, and then maybe we can take the sell right there, and as it breaks this low, we're into profit, and then we just place our stop loss above the previous high. Okay, so trading routine. We're going to get up. We're going to look for our specific securities that we're going to trade. We're going to do a top-down analysis. We're going to figure out what time frame we want to trade on, you specifically. Okay, I like to trade myself on 1 and 5 minutes. That's what I trade. You're not going to find me too much trading 30-minute, 1-hour candles unless I'm trading my swing trading account. I'm going to focus on higher time frames, but majority of the time I'm scalping the market, so I'm focused on lower time frames. But you might be focus on something else. Okay, you still need to, if you want to be a 30-minute trader and wait for 30-minute candles to close and close maybe at 4-hour support demand areas, you also got to watch the 30-minute time frames. It's just part of your daily routine. Okay, so once we've done that, we've located, we've done our top down from daily, hourly to 5 minutes. We've located some resistance areas in the market. We've done our zones. Now we got to understand how the volume is trading. Are we in a ranging market? Is it trading sideways, or are we actually trending? So this is when we have market moves. We got to know the structure of the market. Here we have a move in the market where we're trending bullish. There's an inverted head and shoulder pattern right over here. Left shoulder. Here's your inverted head, came down, hit all the pending orders, picked up the liquidity down there, got that volume. We continue to trade sideways, and then we start to break out with a pullback, and we continue to break out. So here we have kind of a trending market where it starts to go bullish, pull back into support. This area that used to be previous resistance now turns to support, and we continue to hold this level and continue to break out a little further, where we start to get this indecision up here. So you start to see the candle bodies with high wicks, low wicks, in this area. So it's more of a neutral area where we're trading sideways. We're in another range, and then all of a sudden we get this big candle get rejected, close below, and then we push back down. Okay, so it's also part of your job as a trader to identify market structure. Are we trading in a range? So if you're trading in a range, you have to adjust your trading. You got to know that you might be pipping and dipping or scalping in a small area where it might be 20 pips, 25, 30, but you're measuring the move. So you know that if it goes up, it could come back down, come down, it could go back up, unless we start trending. Okay, so part of your job is also to understand, are we trading in a range or in a trend? And then if we're trending, it's best, you have a high probability of continuing to trade with the trend as opposed counter trading. So we also talk about, if you're going to counter trade a move, how do you do it? How do you counter trade a move? Maybe you just get in the trade when it comes down to critical levels of support. That's where you're going to scale out. You're going to take some profit or leave a runner, but you got to know that it could reverse and come back up for your stop loss. Okay, so when you're trading, make sure you know, is it ranging? Is it trending? Ask yourself that so you know what to look for, and have trade with the trend to the best of your ability. Okay, if you're countering the trend, make sure you understand that it could just be a pip and dip unless structure is breaking, and then it reverses. So we've covered news, we've covered top-down analysis, we've covered price action. Learn your candlesticks as much as you can. Learn support and resistance, then chart patterns. Okay, so we have basic patterns are like double tops, double bottoms. It's like an M and a W. Okay, so we have this traditional pattern, which is a double top. Okay, there's two tops up here at an area of kind of resistance, and it got rejected 2 times, not just once, but 2 times. So it's kind of giving extra confirmation that the supply is still up there and it's pushing this move down. Okay, and then there's a neckline, an area of support that held in this market, like right over here. You see when it did come down here, it bounced right back up. So now what we're looking for is when it comes back up to this supply, pick up more offers and continue to come down with more volume and break this and maybe push down, and we have a reversal. So here's one over here. We see it come up and then you start to see it get rejected and push back down. So if you kind of identify this area, you can see with one candle, and then also an area to the left, it's making lower highs. So the market came back up but got rejected, pushed down. Here's where it made its support level. Okay, this is just a traditional basic pattern, but over here it came back down. Did it close below here? No, it came down and back up, closed as a pin bar, came back down again and closed up here. So we continued to push right back up. Then again it continued to push down, and now we finally have a close with volume below this level. It pushed down a little further, but then it rotated right back up. But then you see how it tests again these levels. So these are static levels. Over here it was resistance, resistance, resistance. We closed above, so we flipped this box green now. You can see how we came down. If we flip this box green, we see we came into it and we closed above. We came back into it and then it pushed right back up. But we're coming right back into this area of supply. Then the market rotated right back down. So this green box, you continue to extend it, but now we close below it and we're red now. So the only thing that moves is the volume. Volume is variable. These zones can stay static. So you just gotta kind of change the color. So when we're red again, now we see we come back in. Did any volume kind of close above here to come back up to here? No, it got rejected. So this is maybe we could sell, place our stop loss like above in this zone, according to your risk, and then push it down, and then you come down to previous levels. See this big red candle that came down here and got rejected at this point? So if you're identifying this level as well, you got to know that it came down here, and when it did come down here, it bounced right back up. So in the future, it may come down to this level. So that's why we want to have our top-down analysis done before we're even trading our 5-minute candles. Because if we did our top-down, we would know that this is maybe an area of hourly support. So when it comes down here, I'm not surprised that it bounced back up. So if you're in a sell, you need to make a decision when it comes down here. You can either close your trade entirely. You could remember, these are part also, okay guys, so this is part of your trading routine. Now that we've taken a trade, right? If you guys need to write this down, write this down. When we're in a trade, we have rules that we need to adhere to. So if it comes down to a target, a zone, I use this tool. This is one of my favorite tools to use, is this measuring tape. So anytime I'm taking a move, if it comes down to here, my move is measured. It shows me 25 pips. So if I'm taking a sell like right here, my stop loss is above previous price action, I'm looking for it to break the low and come down to a previous low down here, 25 pips. If it comes down here, red, all the way down, when it's coming down here, I need to make a decision. Okay, the market has came down to my target. So it's 25 pips. If you got to make now a decision here. Okay, so this is part of your routine. This is what keeps me like trading like a robot. I have now a target. It came down to my destination right here. It's kind of like navigation. You know, when you put in an address and the navigation will take you to your destination, and then you end when you get there. I had to do it when I was driving to Quebec. I'm not too familiar with Quebec, so I had to put in the hotel address, and I followed the navigation to take me there. When I got to my destination, it was over. So think of trading as like a navigation. When you have a target, this could be target number 1. You've got to your destination, but your destination here is in profit. So it's 25 pips. Now when you're up 25 pips, you need to make a decision, okay? So if you want to pip and dip and close your entire trade, you can do that. That's rule number 1. Close your entire trade, and after that, be happy with your decision. This is where the woulda, shoulda, couldas can come in and haunt you. If I took out my entire trade right there, and then it bounced over here and then continued to come back down for an extra 10, 15 pips, yes, I could have made more pips. That's a possibility, but it's not always going to happen like that. What happens if these were green candles and it came back up here to where I entered, and then all of a sudden my stop loss or my break even is getting hit, and I didn't take anything down there? So I just want to let you guys know personally, I don't trade with woulda, shoulda, couldas. I trade like a robot. I used to hold trades and hope that they would go down and continue, but that was trading with hoping and praying. I wasn't very consistent when I was trading like that. So then what I taught myself was, Ron, you need to just accept if a trade goes to your target, then do your thing. Either your thing is closing the entire trade, but be happy with the decision. You made 25 pips. You're halfway to your daily goal. Let's look for another trade, and maybe we can finish with our daily goal. Whatever happens after the fact, who cares, okay? Because trading can really, really affect your mindset and destroy you as a trader for tomorrow or next week or the next month. So another option you have here is don't close the entire trade, but close a partial position. Close maybe 50% and then leave 50% with a break even. And maybe if it does continue to go down, your runner will continue to bank pips. Maybe close 75% here. Close 75%, pocket that money, and leave 25% of your remaining trade with a break even. You have no risk. You have and you've rewarded yourself on the way down here. Okay, so those are your options. Otherwise, you're still holding the trade and you need to break this area. So you can see today, did we break down there? No. It came back up, Did we come all the way back up to here? No. So you could be still in the trade, but intraday trading, you should be rewarding yourself, okay? Because we could close this trade and we could buy, and then we could buy the bottom. Here at barcodes, red, green, red, bullish engulfing candle form at an area where you have demand. I could have bought this candle. See how it's ignited. So these are part of our other webinars that we teach when you learn to continue to learn price action. So you got an ignited bar with a short wick, it pops. Maybe place your stop loss 50% of this green volume and just like a trade like that in 10 minutes. If you're a scalper, that's minimal drawdown, and from here and your next ignited candle, you can net another 12 pips. So if you kind of took 25 pips down here, you add another 10, you got 35. Maybe you're looking for another move, another bounce off the bottom, close above, you could take that. And maybe you've hit your 50 pip target for the day, trading this really, really tight area. But you're being disciplined enough to take profit out. Otherwise, you're just holding and you're holding, okay? So that is an M pattern, okay? I just saw it right there, an M pattern. The opposite of an M pattern is like a double bottom, okay? So, just continue looking for those in the markets. Where do they form? Once you learn your double tops, double bottoms, you can learn what a head and shoulder is, inverse head and shoulder, just learning patterns. Once you master price action, individual candlesticks, you learn your support and resistance areas, then you factor in some chart patterns that you're comfortable with. I know a lot of traders that simply look for M and W patterns every single day, and that's all they trade, and they're very successful at what they do, and they're very consistent because that's all they look for. They don't look for cup and handles. They don't look for anything else. That's what they look for, and that's what keeps them consistent. Once they master the double top, double bottom pattern, then maybe they're going to start to learn a new chart pattern. Okay, remember candlesticks? They're a language, okay? They're a trading language. Just like if you and I were trying to learn a different language, if we're learning sign language, if we're learning a musical instrument, we're learning new musical notes. The candlesticks are the same way. They are a language that traders can speak. So once you learn the language, you can start to apply more advanced concepts and perfect that language. So I went to Quebec. My French is not the best, okay? I'm going to admit this, guys. My French is horrible, but I was trying, okay? I was trying out there. I know the basics, but for me to carry a conversation with somebody down there, it's difficult for me. But I can carry the basic conversation. I know I can do that. So if I was really, like if I was moving to Montreal, if I was moving to Quebec, I would really now start to learn advanced concepts to speak French with the people down there, okay? So, but I knew the basics and I know my role. I just know the basics, and they were laughing at me too. They were poking fun at me, and it was all good. But their English was horrible as well. So, you know, I was trying to teach them some English. They didn't know too much English, so it was all good. You know, it's learning different languages. I'm not going to learn French overnight. It might take me a couple years to learn, but trading is the same way. Okay, so part of your routine now, guys, is get up. It's doing your fundamentals, looking at news. Is there any critical news in the market? After that, we're going to do a top-down analysis. So doing a top-down analysis requires that you understand price action, candlesticks. So make sure you know what wicks represent. Okay, a lot of traders still that are learning don't understand what a wick is or what a body is. So the full body represents the entire volume. The wicks represent the range. So this candle opened red. It came down here, but it found some support, found some demand, and the volume came back up where it opened, continued to come up where it made a high and closed near the high up here. So this volume in the 5 minutes, it was all over the place. You got to understand how the volume moves, okay, and what wicks represent, what bodies represent, because they have different meanings. Okay, make sure you understand what a high wick and what a low wick is. Make sure you understand what your indecision candles are. These type of candles, these spin top candles, they have a wick above, wick below, small body. This is a neutral candle. It's 50-50. There's buyers are pushing it up, sellers are pushing it down, but essentially it closes where it opens. So in that time frame in 5 minutes, neither the buyers nor the sellers won in that time frame. It was just sideways. So that's where you'll get maybe some indecision in the market. It's not the best area to be be trading until we have a more of a confirmed move. So when you learn individual price action, you can learn support, resistance. After that, you can learn what is supply and demand. After that, you learn chart patterns, okay? And then once you learn all that, now you see that we haven't even talked about technical indicators. We're just learning about price action and a top down. Now, some of you guys, you use RSI, okay? Relative strength index. If you use this subchart indicator, make sure you understand what this indicator is and learn what it is. It's a lagging indicator. They print after the fact, okay? So it's showing us the strength of this US 30, but sometimes we use this just for confluence. We look for divergence. What is divergence in a market? Okay, so divergence is this. This is divergence. There can be bullish or bearish divergence, or there can be sometimes hidden divergence. So you see this area where we identify it's a support level, hasn't really broke, it's coming in here, going back up. But let's look at the same area with our RSI indicator right here, this point where it comes up to here. Okay, so we can see that the strength is slowly increasing. Each successive low is a higher low. From here, it comes up to the midpoint, 50, gets rejected, comes back. But it's making a higher low from over here. So the strength is slowly increasing. Where the market is not really breaking down. So what we need to do is we just need to figure out where's our neckline. Okay, so this area, I'm always looking about 50% of a bigger body candle right there, 50%, and I can see when it comes up, it got rejected. But as it's coming down, our strength indicator is increasing. So we've kind of found our lower time frame resistance right here, and then what we can look for is our double bottom. Okay, so we're looking for the double bottom where it came down one time. There's our neckline, got rejected there, came back down, there's our double bottom, and now we're breaking out of here. Okay, so we're breaking out now with strength increasing. Okay, and then this is where we get some volume close above. So any one of these candles, if I bought up here, okay, we get a little bit of consolidation before the breakout. So that's kind of like a bullish move. Remember guys, this is today's volume and it's very consolidated. So this pattern on a different day could net you more pips, but I'm just trying to show you guys how you can incorporate different styles. But remember, this is just on today's volume. It's not the greatest move, but if this was same setup on a normal day, maybe this could have moved up to this area of resistance and could have got us a little bit more pips. But I'm just trying to explain, walk through the motions of the market. Again, I don't really like backtesting. Never been big fan of it, live backtesting. But I want to show you, we got a double bottom. We just talked about a double top up here. Here's the opposite, double bottom at an area of demand. Now we have confluence of our indicator down here showing us that the strength is increasing. So I would be leaning towards buy side here. As opposed to a sell side. Now I got my confirmation with some volume closing above and I got a retest. So if I bought this area, buy, my stop loss, now how much am I willing to risk? Would I want to be a tight conservative stop, maybe below the previous low, or do I want to keep my stop loss in this demand area? That's depends on how much you're willing to risk on this trade. But we can see the move start to come up, break out of here and come up to here. So again, you can get yourself, you can scalp for 10 to 12 pips. This move like right here. So again, if you're looking for scalp 10, 12, 15, 20 pips, it's a move like this. And then when it comes up to previous areas of resistance, you got to understand, maybe you got to scale out of there. Today, this was the end of the day, okay? So I know I'm showing you guys the worst volume here. The markets are closed right now. You can see Bookmap just stopped. You can see these candles. So 1 p.m. markets are closed. They closed early today. That's why we're doing an education session. So number one, now you learn chart patterns, okay? You now combine some technical indicators for confluence. But I put indicators after the fact. Once I've done my top-down analysis, I've looked at price action, I've already developed my zones. Now I look at how the RSI indicator is moving. Some of you guys use MACD. Some of you guys use stochastics. Also moving averages. Some of you guys use a 9 EMA. This is a 9 EMA. Some of you guys use a 20 EMA, 21. 200 is right here. So this is another confluence. Remember where we're looking for the M top up there? Okay, so we identified the M top right there. We identified where the neckline was. Now, when you add some confluence of some other indicators, you see over here the 9 starts to cross below the 200. This is what technically is called the death cross, where the 9 crosses the 200. So you can see it crosses, kind of retests, and then the volume stays, hugs below the 9 EMA and moves down. So if I was taking this sell position right here, not only do we get the double top, we get confirmed volume closing below, we get a retest coming back up. This box should be flipped red. And now for some of you guys that trade with these type of indicators, you see the death cross. So maybe this is going to give you that added confirmation to sell, place your stop loss either here or up here, and then you're riding this momentum down to the next area of support. So with the use of technical indicators, okay? But what I recommend, before you add technical indicators, you should learn price action. And then what you do is you use the technical indicators to complement your style, your analysis to help you. But I don't recommend if you're just a indicator trader, because they're lagging, they're behind time. So price action is a leading indicator. That's why we stress to learn price action. I'm a price action trader. When a lot of traders ask me, Ron, what style trader are you? Do you do SMC? Do you do ICT? Do you do this? Do you do that? I've always been a price action trader all of my life. The only thing I've over time is I've learned how to identify support areas, resistance areas, zones. I'm a zone to zone trader. I don't know if there's a name for that, but I'm also a zone to zone trader. So I identify my zones with my ruler. I'm just like a handyman, you know, like a tradesman, like a carpenter. If I call a carpenter to do a job at my house, first thing they're going to do is measure the room, measure the size with their tape measure to know the dimensions. So same thing with trading. My favorite tool is this, the tape measure. I want to measure the approximate zones so I know if I'm trading in here today, this is 15 pips from down here to up here, 15, 1-5, not 50. So unless it breaks out and I get a trending move. But if I'm trading inside here, I have to know minus my spread, minus my commissions, that I might be just looking for 8 to 10 to 12 pips inside here if I'm trading. There's no guarantee it's going to go more than that, okay? So that's why this is a very handy tool, your ruler as a trader. Make sure you understand that. So we've gone over price action, support, resistance, guys. I'm trying to walk you guys through the checklist for your daily routine. So start off in the morning, get up, look at news, okay? That's part of your routine every single day, specific to the security you're trading. So if you're trading US 30, you should be focused on more of US news as opposed to European news, okay? Depends again what security you're trading. So get up, go through your Forex Factory. These should be daily motions every single day. So when you do this, you don't have to look at your checklist anymore. It's just routine. It's going to be like, you should know this you can be half asleep and you're going to do this daily, okay? So checklist, make sure you look at your news. Forex Factory is just a basic one. There's FX Street, there's investors.com, there's Bloomberg Report. There's so many other free news outlets that you can do, that you can look for. Once you do the news, now it's your specific security. So I recommend don't be doing 10, 20 securities a day. It's too overwhelming. You're not going to be focused unless you're a very, very experienced trader and you know how to multitask and your brain can switch quickly from moving from security to security. Because as you move from security to security, lot sizes change, volatility changes, spreads change, commissions change. So just all of these things, you need to factor all of these things in. That's why I like trading US 30, because I know with my broker or prop firm that I have good spreads and I have zero commissions. I like that, okay? I don't like paying commissions. I used to trade gold a lot, where I was paying $500 a day just in commission fees alone when I was scalping gold with higher lot sizes. It added up. It added $10,000 a month of unnecessary fees that me limiting how much I trade gold has saved me $5,000 to $10,000 a month in paying brokerage commission fees. So just like that, just by journaling how much I was trading gold in the past, allowed me to see that. Because when we make profits, we don't really look at the what happens inside. We just look at the end of the day results. We made $100 today. We made $200. But when we made $100, we didn't factor in that it cost us $20 in commissions and maybe $15 in spreads that we could have saved that. So, as a trader, every single pip, every single dollar that we can save is money in our pockets. So that's why I transitioned more to trade index related securities, because I like trading low spreads, fast moves, volume with zero commissions. So that's just me personally, what I did to navigate from Forex and commodities into indices. So this is all specific with you, with your trading styles, guys. That's why I want to go over this. So to show you that everybody is unique, everybody is different. What works for me might not work for you. The way how Dave trades, he loves trading gold. It works for him. Might not work for somebody else, but it works for Dave. Everybody has their favorite securities and their method to their madness and everything, but you can do whatever you want. If you're trading GBP USD, make sure you understand when does the pound dollar move the best. Make sure you understand that the moves, when you're measuring a move, you're trading Forex, it's not going to be the same type of move. So when we're trading US 30 on 1 and 5 minute candles, sometimes 1 5-minute candle is 30 pips. You're not always going to get a 30 pip 5-minute candle with trading GBP USD. So it's just get to know your security like it's your spouse, like it's your children. Get to know their behavior so the better you know how they move, then it's going to make life easier for you as a trader. So price action, top-down analysis, make sure you know how to do these things. We have so much courses and quizzes and webinars explaining these different concepts in our academy that we have here at SST that we've built for you guys. But when you learn price action after, support, resistance, supply, demand areas, now once you got those checked off, you're doing really well at that. Now start to learn some chart patterns. Start to get confident trading, and don't start off with 20 different chart patterns. Start off with the basics. Start off with a double top, a double bottom, M and W, maybe a head and shoulder. But no, don't just identify, say, Ron, I can see an M pattern, okay? We can all visually see that this is an M pattern, but this is where it gets more advanced. Now, take the time to learn, why is this an M pattern? Okay, we can all see it's a double top. It came up one time, got rejected, came up another time, and got rejected and pushed down. But why? Why is this happening? So this is where Bookmap can help identify more offers coming into the market. There is a supplier that's absorbing this liquidity so that they can redistribute this at a different time. But the absorption, things like this is what helps you understand the markets and where you're not maybe panicking. So if I took the sell down here, down here, we took the sell on impulse down in here, we missed the move here, but now it's coming back up. Some traders panic as it's coming back up, but you got to understand that it might be coming up into this block where it could get rejected again. If we get volume closing above here and then we flip this green box and then it starts to move up, then maybe it's time to cut that trade, get out of it, reevaluate the situation, and then don't incur more losses. But if you were holding this and then you see it came back down, maybe this will encourage you to maybe add another sell position. Yeah, you hit one down here, it went into drawdown, maybe you got in a little bit too early at the neckline. That's where feeler trades can help understand the move, and then now you see it, the double top confirmed with more selling pressure, then you can add another position. You see it rotate right back up to the neckline, then push down again. So now you see we're riding a little bit more of a trend now. So the double top created this trend where we're making lower lows, lower highs, lower lows, and this was a lower high, but this is the end of today's market, so they held it here. But traditionally, maybe if this broke, we would have been dropping further down into here. Okay, so and then also part of daily routine is hitting daily goals. Okay, so when you're trading throughout the day, we talked about this when we started the call. What is everyone's daily goal? Some of you guys said 30, 50 pips a day. Some of you guys said 0.5%, 1%. Now, it's part of the discipline. When you hit these goals, now make a decision. Do you want to stop trading, walk out of the markets? This is sometimes scalpers can hit daily goals in 30 minutes, 60 minutes, 90 minutes. And then now what do you do with the rest of your day? Okay, this is another thing that we'll do as another webinar. Other than trading, what else can we do? So trading is an outlet to help you do other things in life. Maybe some of you guys want to start a personal business for yourself or for your family. Maybe some of you guys want to travel. Maybe some of you guys want to I don't know, spend time with your family, spend time with your kids and things like that. But trading allows this, guys. If you're very disciplined and you know what to get out of these markets and you're happy with your daily goal, this is where greed can destroy you, okay? So you know when we hit a daily goal of 1% and then greed kicks in, we want 2%, 3%. You can, okay? If you're trading and you got the momentum of the market, you trade with the momentum, like, you know, just like a basketball player, like Michael Jordan. You know, once he gets in the rhythm, if he's hit 5 jump shots in a row, the coach and the players don't tell Michael Jordan, stop shooting, stop shooting. They're going to feed him the ball. You know, that's how basketball works. If you're the hot hand, the teammates should give you the ball so you can continue with that hot hand until you cool off. So trading is the same way. Let's say you're reading the market amazing, and every single trade you're taking is going to a TP. You're reading it, the market is trending, you've hit your daily goal. Now maybe today is a day that you could really grow and compound your account. You don't necessarily have to stop trading unless you're happy with your daily goal. But if you want to now go for 2%, let's say you go from 1%, you continue to read the markets at 2%, you're up. That 1%, make sure that 1% is locked in. That's your daily goal, is you got it locked in. So if you're trading now 0.5%, 1%, now you've hit 2%, like a trailing stop loss. Now you have a daily stop loss. So now maybe increase it to 1.5%. You're still above and beyond your daily goal, but you still want to continue to trade because you got that momentum. Then, but if it comes down and you get stopped out at 1.5%, that's it. Now you're done. That's like Michael Jordan missing a couple shots and now he's cooling off. Okay, so you as a trader, you got to cool off too. Walk away from the markets. You've exceeded your daily goal. You continue to trade, but now you're done. You never know. Maybe you're going to turn that 1% into 2, maybe 3. Some of you guys hit 5% in one day, but you got to have a trailing stop loss. So continue to trail your daily goal with it. So if you get stopped out, you walk away from the markets, you're still happy, you've exceeded your daily goal, review what you did well today, and then let's do this again tomorrow, okay? Trading, guys, is not a sprint. It's a marathon. It takes time, okay? So remember, we're not going to become millionaires overnight. Maybe one of you guys will. There is those one-hit wonders that do that, but most traders are years and years and years in the markets before they even see their first dollar profit, okay? So take these markets serious. You're trading the live financial global markets where trillions of dollars trade daily. You're not just trading against other retail traders. You're trading against corporations. You're trading against some of the largest banks in the world. You're trading against institutions. You're trading against market makers. You're trading against brokers, because some brokers are better than others with spreads and commissions. So some of you guys are trading US 30 and you guys have a 3.5 pip spread, where some of us have a 1.2 pip spread. So you can see that I have a little bit more of an advantage over you. I'm not saying that to disrespect or anything like that, but I'm just saying with my broker, I have a 1.2 spread. And if you're trading with 3.5, and when I get in a trade, I'm 2 pips ahead of you. So I just want you guys to learn that doing due diligence, learning about which broker is the best for you. So it depends where you live in the world. Some brokers are not allowed for U.S. residents. Like I also have HankoTrade, I have Fusion, but members in U.S. can't trade with Fusion because of the laws and regulations. So I got in with Fusion years and years ago, where I got grandfathered in with them. Because now, where I live in Ontario, Canada, if my neighbor wants to sign up with Fusion, they don't allow it. Ontario created new laws and regulations as well. Same with US. That if I cancel Fusion, I won't be allowed to sign up with them ever again. So I've kept Fusion as my broker, and I'll never get rid of them. But I also use HankoTrade AAAFx. I have an MFF live account as well, so I have a prop firm live account. I have a couple accounts. One is strictly for scalping. I have another one for swing trading, because it's a different mindset. So if I want to swing trade, I gotta go on higher time frames and have a different mindset. My stop loss will be higher, but I use a separate account for swing trading as opposed to my scalping account, because different mindset. Okay, guys, so daily routine, make sure that you adhere to this. Okay, that's why we have daily routines. You want to develop good habits in trading. If there's something that you're having bad habits, you got to stop that. Okay, some of you guys have horrible bad habits of over trading. Some of you guys have horrible bad habits of over leveraging. Some of you guys have horrible bad habits of trading too many securities. Not knowing when to trade. That's also, so this is part of your education to be the best trader that you can be. So start to eliminate negative things that you're doing. Okay, eliminate your bad habits. I had a lot of bad habits. My bad habits were over trading. I used to trade 12 to 24 hours a day, and I found out that that was too much. I didn't want to do that. I was doing that before I was married and had kids. So at that time, I could do that. But now, if I did that, you know how selfish that would be for my kids and things like that, where I would never see them because all I'm doing is trading. So I've learned over time that I need to limit how much time I'm in the market, and I got to make the best of it when I'm in the market, because I might be trading for 2 hours. So I want to target the best volume possible. So I really enjoy the volatility of Wall Street, post Wall Street, and near the market close, because I know every single day there's going to be news, there's going to be volatility. As a scalper, I can maybe get in and out of the market, being disciplined, looking for my daily goal, and go on with my day. So some of you guys haven't learned that yet, and it takes time. So it does take time, guys. I'm going to be honest with you guys. It took me a lot of years to learn that discipline. Some of you guys are getting there. Some of you guys will get there faster than others. Remember, you're not competing against me. You're not competing against other traders. Remember, trading is very personal. It's you versus the market. It's your psychology versus the market. Okay, so you're not trading against any of us. Okay, for every trade, there's going to be a winner, there's going to be a loser. For every loser, there's a winner. That's how trading works. But trading every single day, if you keep losing daily, you're losing because you're getting beat by yourself. Okay, I don't know how to word it, but it might sound silly. But if you're losing every single day, it's not the market is taking your money. It's not some other, like someone, it's outside factor. It's you. Okay, this is where accountability and being mature as an adult has to take place. Like if I go to a casino every single day and I lose money, it's not the casino's fault, it's me. I'm walking in and I'm throwing my money away in the casino every single day. The casino is open 24 hours. The doors are open. Anybody can walk in and play in there. Some people are going to make money, some people are going to lose money. But if I'm constantly losing money in there every single day, yeah, I'm going to blame the casino, I'm going to blame the cards, I'm going to blame the other people, but accountability, it's me. I'm the one that's walking in there and losing the money every single day. It's me. At the end of the day, it's me. This is where, guys, we have to be accountable. If we keep blaming outside factors, today it's the market, today it's the broker, today it's the this, today it's that, today it's that, you're never gonna become mature and accept that you are in charge of your wins and your losses. Okay, if you're losing, maybe we need to take a step back from the live markets and look, why are we losing as traders every single day? What is it that we're doing? It might be, you guys might not look at it now, but it might be some of the easiest simple fixes that we can do. Maybe if you're over leveraging, stop over leveraging. If you have a $10,000 account, stop trading with standard lot sizes. Start to trade with lower lot sizes where maybe you can hold a trade and see how it develops without panicking, or and then learn how to close trades as well. Okay, you have to close trades as a trader. I still see some of you guys are holding trades, a scalp that turns into a 4-hour hold, that turns into a daily hold, that turns into a weekly hold, where you could have cut this a long time ago. Okay, it's hard for me to just continue to say what to do. You guys got to put this into work. You guys got to do this. Okay, I had to figure this out. As much as people were telling me, Ron, you're over trading. I had to learn it for myself. Some of us are stubborn, okay? Let's admit it. A lot of us are very stubborn. And the way how we learn things, stubborn, is by losing a lot of money, okay? You know, when we trade the markets, if we're trading our own capital, we might lose it, okay? And our own being stubborn is going to make us lose it. If we're very disciplined with what we're putting in the market and we learn that this is hard-earned money. Some of you guys money doesn't grow at the tree in your backyard. Some of you guys work hard physical jobs to get this money to put in these markets. So this is where you got to learn the discipline, guys. Treat money with respect, the value of money. Make sure you understand the value of money. Some of you guys don't understand the value of money. Maybe some of you guys have never worked hard physical labor. You know, if you're working a hard physical job, 8 to 10 hours at a good paying job here in Canada, like if you're on the construction site and you're forming, they're making about $30 an hour. $30 an hour at 8 to 10 hours is about $250 a day. Minus taxes might be $180 take home, but they're working hard physical labor to make $250 at a job where they're working 8 to 10 hours, travel back and forth, you know, where you and I can trade 2 hours a day and make that same daily goal as somebody else working a hard physical, but it's treating that money with respect. When you hit your daily goal, that's why walk away. Treat your trading as if you're as a business, as if you're working. Treat it as you're going to work, you hit your daily goal, and now you're done. When you leave work, last thing you're thinking about is work. You go home to be with your family and things like that. Treat trading the same way, where it's just your daily routine. It's your job every single day. You know exactly what you're going into the markets to get, and you know when you get it, you get out. Okay, that comes with discipline. Some traders learned years and years and years of how to do that. Okay, remember, it's not get rich quick. Okay, forget all that. Forget the Lamborghinis. Forget all of those things, guys. Some of you may achieve that status, but most of you guys are not. So don't think that every trader trades and gets a Lamborghini. Okay, that could be all show on YouTube and things like that. But what they're not showing you and what they're failing to show you is their losses, their hard times. Nobody wants to show hard times. Okay, I'll speak about my hard times. I'll tell you guys all about it. But we could also talk about good times. You know, like I can show you cars and things like that. But I want you guys to understand that SST is an education platform. We're not here to show off what type of cars we drive or what type of house we live in. We're here to show how our education can help you. Okay, we want to be respected for education, not for the car we drive. You know, that's where SST comes in, and we want to help educate everybody, whether it's free on YouTube or it's you guys in our Zoom. We spend more time with you guys every time in Zoom. But everybody needs to learn this, guys. Okay, this is why I feel like traders are having so much difficulty these days, is because everybody just wants what the 1% of traders have. But 99% of us are not going to achieve that. Okay, but what we can do is we can change our life. Okay, 0.5%, 1%. I know it might not seem like a lot, but when you're doing this with a little bit more capital, or you've learned how to do this with a prop firm of 25,000, 50,000, 100,000, now look at what we can do. With a couple $100 a day, or you know, we can buy groceries through trading. If you get a little bit better than that, maybe you're going to help pay down your mortgage. Any extra money you put down on your mortgage helps because it goes directly to the principal. So any principal payment that you're doing right now goes directly. You can help pay your mortgage faster. Get out of debt, guys. Pay your mortgage. Pay your car down. pay your school education down. Once you eliminate those, you're not paying any more interest for the rest of your life. Now you can start to accumulate wealth. And once you accumulate wealth, you can start to look into, Ron, maybe I want to invest in some dividend stocks and start getting dividend payments for the rest of your life. Maybe you want to start looking at other things. Maybe some of you guys are interested in purchasing a rental property, or maybe a second house, or things like that. But it all starts, you got to start small, okay? Start with small. Remember what we were talking about. Small, manageable tasks that we can do daily, and those will start to become bigger and bigger as the years go on. Okay, so that's guys, that's the truth. Okay, like, I know it doesn't sound sexy. Not everyone wants to hear that. It's the boring way of talking, but I believe it's the best way. Once you start doing this, and you're going to start to, with trading, if you can start to eliminate some of your debt, and then now all of that interest you are paying, some of you guys, I have conversations with guys, some of you guys are paying $1,000 to $2,000 to $3,000 in interest alone on mortgage, on credit cards, on line of credits, on student, your student line of credit, everything. Some of you guys are, think about it, $1,000 to $2,000 to $3,000 is just interest alone payments, where you're not even touching your principal on any of your debt. So if you can start to eliminate your interest by putting more and more down on principal, eventually over time your interest payments are going to be eliminated. Now you're paying yourself. Now all of that money, remember, I'm a cheap person. I don't like paying extra money. That's why I moved from gold to US 30 over the years, was I didn't like to give my broker $10,000 a month. I would rather that in my pocket and my kids' pockets. So also with you guys, if you have interest payments, if you start to eliminate that, now you're paying yourself. You just now gave yourself a paycheck. Now instead of paying the banks $1,000, $2,000, $3,000 in interest, that money is now in your pocket. Now you can start to build wealth, and wealth is generational. So it's got to start somewhere. It needs to start somewhere. If you're living in a poor country, a developing country, if you came from nothing, you got to be the first one to start this. Okay, it's not going to be given to you. Maybe you might get lucky and you're born into this, but some of us never came from that. It had to start somewhere. So we can build this for our kids' future. Our kids can build for their future. It's generational wealth. Why are the rich always getting richer and the poor getting poorer, and the middle class globally is getting eliminated? Is because no one is thinking for the future. Everyone is just thinking for today. But think for the future, guys. Trading is, we scalp the markets, but trading is also long term. Okay, you got to think 1 year down the road. Where do you want to be 1 year from now? Maybe 1 year from now is you passed a prop firm, and maybe you want to get 2 prop firms now. So where do you want to be in 3 years from now? Once you start getting some payouts from your prop firm, what do you want to do with that money? Do you want to go buy that Lamborghini and just drive it around? Some of you guys don't understand how much it is to fill up a Lamborghini with gas, how much it is to change the brakes, how much it is to change the oil. So you got to factor in all of those things. It's nice to go buy a $500,000 Lamborghini, but then when they kick you with those costs, you got to be prepared for it. Because I know a lot of traders that buy the Lamborghini and then they're complaining about how much the oil costs to change or how much it costs to fill up. And I'm like, why are you complaining when you got a $500,000 car? You shouldn't be worried about those things. But it's more than just Instagram pictures and things like that. So guys, I don't know why I'm talking about this, but it's all part of the daily routine of a trader. It starts small, but then you can look for what to do in bigger terms. Okay, we're going to start a stock and option program. We're developing it with Yoda right now. It's a lot of work. We want to make sure we prepare it the way how we want it, because there's more to just forex trading out there. You could do stocks and options, guys. You could do so much more things in trading. You can take a little bit from forex, move some of your profits into the stock and option market, and create more revenue down there, and then you can have multiple streams of revenue as a trader. So these are things that we want to share with you, things that we're going to teach in the future. It takes time, okay? It's patience and discipline. We're trying to make sure that everybody at SST has a good start with Forex, and we want to make sure everybody is succeeding before we move on. But we understand that we cannot do that. Okay, as much as we want to cater to everybody here, we now understand that some traders are at beginner level, some are more advanced, some are more intermediate. So we need to cater to everybody, but we want to create a program where we have quizzes, we have the courses, we have all the webinars, we have the boot camps available for everybody at different levels. So it makes it just like we're going back to school. I was in university. I kind of want to have it structured like when I was back in school. I had my favorite professors and things like that. And the reason why they were my favorite professors was because they had knowledge of not just theory of reading a book. I had TAs for that. I had teaching assistants that were my age when I was in school, and all they did was just read a book and read it back to me. I wasn't really like too much into what they were doing. I was more into my professor because he had 30-40 years of economics, so he was teaching personal experiences. So that's what I really I cater to, and I loved going to his classes because not only was he reading from a book, he was talking about personal experiences that happened in the past in economics. So most of us here at SST, some of us have some years that we put in the market, so we have a little bit of experience. So these are things that we can pass on to you guys, you know. And I'm telling you, experience does help in the markets. The more experience you have, the better you're going to gain knowledge and do. It's just like with your job. The more experience you have at your job, the better you get. So trading is the same way. But if you come into these markets thinking that you're going to become a millionaire, it's not going to happen. You got a lot to learn, okay? A lot. So start off small, smaller tasks, and if you hit one goal, check mark it. Let's see if we can turn daily goals into weekly goals. Some of you guys have had your first back-to-back profitable months at SST, and that is amazing. Some of you guys are doing really, really well, but there's others that are still struggling. So that's why on Thursday, guys, our webinar this week, we're going to go over name 3 things that you're still struggling with as a trader. How can we overcome this? And also, guys, I want it to be more interactive. Our webinar this Thursday is if you've overcome some struggles and now you've learned how to be consistent, what are you doing? Can you share some of your tips with our members and help us to understand what are you doing that's helped you overcome and that you're doing really well. Okay, guys? So that was today's session. I know we didn't do any live trading, but look at the markets are closed right now. Nothing is really moving. So we really wanted to hold this session for you guys to help you guys. So maybe this can give you guys a little bit of guidance where to get started. I know it's a lot. We talked about a lot here in these 2 hours, but I hope, guys, that this is a good little start, like a little blueprint to get you guys started. It's not everything, okay? It's just a start. Maybe some of you guys now have a little bit more what I need to work on, what I can do more. And each little thing that we talked about can have a specific session that we can talk about for hours and hours, okay? But we gotta learn somewhere how to start, guys, okay? So I gotta now take my son to get braces, guys. I appreciate all of you guys. We will see you guys. PK has the post, has an Asian session later tonight. And then we're going to do our live Londons starting tomorrow and Wall Street and everything after. Guys, for the guys in Zoom, we have our Zoom post power hour sessions now. We're going to go Wednesday, Thursday, and we'll play Friday by ear, but it's going to be 2 to 4 p.m. So we're going to start that with myself. We'll be going right through to the end of the day, so I'm really, really excited about that as well. Guys, if you are willing, want to learn about Bookmap, download the link. It's in our description. Start off free with Bitcoin and learn how to order flow works. Also, check out HankoTrade and AAAFx. They do offer deposit bonuses of 100 to 200%, and that's really nice of them that they do that. So if you were to deposit $100, they'll match that and give you the bonus. So that's really good. But also what I recommend is before you deposit any money in the markets, learn with a demo account, okay? Go through the motions. Learn how to trade before you even think about making any money. That should be the last thing on your mind, is making money. Learn, okay? When you go to university and you go to college, I know we all want to get a good degree and we want to make money, but for 4 years, you're learning. You're learning before you even make any money. That's just a 4-year Bachelor of Arts degree. What about in here in the group? We've got pharmacists, we've got doctors, we've got lawyers. 4 years. When we say that to them, they're going to laugh at us. They're going to say, "Ron, I've done 10 years of post education before I even started working and making any money." So trading is the same way, guys. Why do we think that we're going to learn trading in 1 week and make money? Okay, it takes time. Some of you guys might take 3 months, a year, 2 years, 4 years, but everybody's different levels. Okay, but take your time learning. So thank you guys for joining. I appreciate everybody. Thank you, Efren, for joining, bro. I appreciate you guys. Thank you, Rafi, for joining. Are they in the UK? Who? Oh, Hanko? No, Hanko is an island from Africa. Okay, guys. So that's it for me. I got to get these kids to the dentist. But take care, everyone. I hope you guys enjoyed today's session. If you can hit a like, subscribe to the channel for education, guys. That's what we want to be known for here. We're excited to get back into the markets tomorrow with normal trading volume. And yeah, so let's have some fun this week, guys. Remember, try and hit your daily goals, weekly goals. Some of you guys are doing really well. Continue success. Others that are struggling, let's go back now and go back to your journals and find out what you're struggling, what you can work on, because trading is a work in progress. Okay, it's like a Picasso. You got to make this the best version that is best for you. Okay, don't look at other people, what they're doing. Okay, don't compare yourself with other traders. That might be the first mistake you're doing, is use them as motivation to get where you want to go, but you don't have to do what someone else is doing every single day. We don't know what type of money they're trading with, what type of capital they're trading with. We don't know how many years of experience they have in the markets. There's so many variables, okay? But use them as motivation to get where you want to go, okay? And hopefully you guys can get there. I know you guys can, but it does take hard work. It does take a little sweat equity on your part. It does take sacrifice of sleep. It does take a little bit of sacrifice time on the weekends where you're learning. Some of you guys are already doing that, but remember what we said. We go 6 months going ghost. Remember we had that? Where 6 months you were going to be selfish and you were going to dedicate time for yourself to learn something new. Maybe avoid going out as much as you can. Don't watch as much Netflix and things like that because you're learning something. And then we'll go over this again come December and the end of the year and get ready for 2024. So some of you guys are already there, but for those that aren't, we got work to do. Okay. So thank you guys. I appreciate all of your time. Is you're improving in your trading and push-ups? Yeah, so that's a good way too. Dave was always saying that in between your trading, if you've kind of trapped some liquidity and it's trading sideways, get a pull-up bar or do some push-ups. It doesn't cost anything to do push-ups. Do jumping jacks, whatever you got to do. You can keep in shape, stay active. And just do some exercise in between your trades. Set some alerts and do some exercise. You can do 2 things at once. Okay, guys. Iliad, month 2 of Become a Ghost Challenge. Good. So month 2, maybe go over month 1. What are things that you did good? What are things that you can improve? And let's take this into month 2 and let's continue perfecting and go into month 3. Once you come out of this, Iliad, you might be a completely different person. You might be a different trader. Patience and discipline, guys, sorry, before I leave, it's not just about trading. It's about everything in life. Like, think about it. When you have kids, you have to be very patient and disciplined. When I had kids, I had to learn. Otherwise, they would drive me crazy. So patience and discipline helps with everything in your life, from everything, not just trading. So it also helps in everything in life. Helps eliminate a lot of stress. Okay, guys. So thank you guys so much. I appreciate you guys. Have a good day. God bless everyone. We'll see you guys tomorrow, live London, and let's get these pips together. Have fun, guys. Enjoy your day. Happy 4th of July to everybody in the US. Happy Canada Day, guys, to everybody in Canada. And happy whatever you guys celebrate around the world to you guys too. Thank you, guys. Enjoy your day.
Hey guys, good morning. Welcome to another live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, you guys, 200 pips, please secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.